From KSEV, the voice of Texas. This is the Home Finance Hour with Frank Sheehy. If you think your mortgage payments are too high, cut them. If you want to use the equity in your house, do it. If you have questions about a loan you're considering, ask them here on the Home Finance Hour. Frank Sheehy owns the Integrity Mortgage Group of Houston. He's here to save you money and answer your questions at 281-558-5738. And now, the Home Finance Hour with your host, Frank Sheehy.
Welcome to the Home Finance Show. This is Frank Sheehy, your host. Welcome to the program. Seems like every Thursday it's dreary, and I'm the one that's doing the radio program. So sorry about the bad weather today. Kind of nasty and cold and rainy, but a beautiful afternoon to have all of your mortgage questions and all your home finance questions answered and addressed. So welcome to the program. This is Frank Sheehy. This is the Home Finance Hour, and our program is centered directly around you. Any questions that you have about financing and anything that has to do with FHA, VA, conventional, cash out, lot loans, construction financing, reverse mortgages, co-borrowers, credit scores, appraisals, anything that you have that you'd like to get on the air with us today, we'd like to address with you. My company is the Integrity Mortgage Group. I've been doing home loans since the late 1980s, and we're here to help you with any questions that you have. If you have a scenario you want to run past us, if you're trying to find a property, if you're trying to sell a property, obviously the market's still very robust, and rumors of our demise have been greatly over-exaggerated. I see crude prices up about 6% just today, so hopefully the panic about the oil prices here in Houston has subsided, and we can go on about our business, and our business is being busy. A lot of people in town these days, a lot of activity. I see the inventory numbers on HAR. Checked them last night. I think it was around 44,000 if I remember correctly. So inventory supply is very tight. Not quite as active as we were last summer, but a lot of that's just seasonal. And as a result, we're going to be going into a really, really hot spring season. So it's great if you're trying to sell. It's a little sketchy if you're trying to buy, and it's a great time to go ahead and get your approval, get all your ducks in a row for financing. Had a caller last week called, ready to go, ready to get approved, ready to get go out and find a property, and we're all ready to have everything completed. And he says, well, I don't have those tax returns for the last 2 years. I'm not ready to send those to you. I said, we need to have that documentation if possible. So this is a good time to make sure you're up to date. You have all your information current. A lot of people are doing their income tax returns right now. So they're compiling all their information, getting their payroll records, getting their bank information, getting all their stuff in one place. So it's a good time to kind of have a bank file set aside too, your mortgage file, your pre-approval file, if you think you're going to try to buy a home here in the spring or this summer. This is an incredibly good time to do it. Obviously, interest rates are at all-time lows. I mean, all-time as in since the dinosaurs walked the earth. So this is a good time to think about getting into another property. My next-door neighbor listed his house last Friday, and he sold his house last Friday. Took him the same day, and they had an open house over the weekend at his house, and the house had already been sold. So it's pretty amazing what's going on with properties that are priced right. And he actually had an open house before the Super Bowl. Speaking of the Super Bowl, as many of you know, I did predict that New England would win that game. And that was my mortal lock of the week. Now, of course, my winning percentage this last season, not great, but I picked every single playoff game correctly against the spread except for one game. So I just wanted to mention that. Speaking of the Super Bowl even more, the National Retail Federation estimates that Americans spent over $12 billion on food, drink, game-related merchandise, and new electronics, including 7.5 million new TVs just to watch the big game. In all, 1.2 billion chicken wings, 79 million pounds of guacamole, 32 million slices of pizza, and 11 million pounds of potato chips were consumed on Sunday, February 1st. Oh, and by the way, all this fine dining was washed down with 50 million cases of beer. As a result, it's estimated that over 7 million people called in sick after the Super Bowl on Monday. So there you have it. I've always wondered why we don't have the Super Bowl on Saturday. Has anybody ever thought of that? And I know it's because they had that big, what was that big party they had? They had the big award show, right, on Saturday night before the game. Just move that to Friday night, right? Because there's nothing else on TV anyway. All right, if I were king for the day or a day. Anyway, so that's the open. If you want to join us today, my name's Frank Sheehy. Our number here, you're welcome to call 281-558-5738, 281-558-5738, and we'll get you on the air. I'll tell you a theme that I've seen here recently the last few months. A lot of my borrowers are getting older, right? They're aging. Their children are becoming adults. The millennials are getting older. Their parents were my customers back 20 years ago. And I'll run you past some situations that we've been dealing with. I have one borrower right now. She lives in Dallas, and she bought a property here in Houston. Her son was going to school, and then he's been working here, but she wanted him to be in a certain part of town, so they helped him buy a property. Well, about 3 years ago, they bought this property. He has been living there with some roommates or whatever. Now she's come back to me, and she says, look, we're getting ready to inherit some money. We want to buy the loan balance down on some of our rental properties, one of them being this home where my son lives. What can we do about that property? So after some discussion and going through what was going to make the most sense for her, what we decided to do was take the loan balance down, what we call a curtailment. We were going to reduce the loan balance and do a curtailment on the loan balance and then change the term on that remaining balance. And for various reasons, she wanted to do this. One of those was she wanted to put this property into some kind of a family limited partnership down the road, which is a great avenue for folks that are trying to protect wealth once in case of their demise. So this is a way to do that and put some of the assets in that family limited partnership, which she's been counseled on how to do that. And there are folks here in town that are very good at putting those together. So the scenario that she's looking at has been kind of prompted by this really solid economic situation with the interest rates being such that they've got the capability of doing something with that loan balance. I have another borrower that's getting ready to close actually here very shortly, taking money from a retirement account, and then how do we qualify that income for the approval on the loan? What's involved with that? What's the duration of that? These are all things that have to be taken into account. I have a lot of people that are just recently retired, like retired in December, that are starting to take withdrawals from their accounts. And sometimes we can't count all the income immediately because of some of the rules that we have that are put in front of us by the agencies and our investors that buy our loans. So even if you retire with a couple $1,000,000 in the bank, until you've shown some history of taking those withdrawals, that we oftentimes have hurdles with getting the approvals done. There's oftentimes a solution, but it creates a little bit of angst for our borrowers because they look at their bank statements and they say, well, I've got all this money. Why can't I get approved right now? So those are kind of some of the things we talk about. Let's take one call before we go to break. We're going to take a call here. We'll get the phone lines going. If you want to join us, 281-558-5738. We're going to go to line one. Good afternoon, Paul.
Yeah, hi, Frank. I got kind of a dumb question, but probably an easy one for you. To what extent does a credit score influence the rates you're going to get? Let's say it's closer to 700 than 800. Is that going to make a big difference?
It's not going to make a big difference. It could make a difference.
Okay. Like an eighth of a point, something like that?
It just depends on the loan product. For example, the government loan products like FHA and VA don't really make a differentiation with the higher credit scores. I consider anything over like a 680 a really good credit score. So the government agencies and those underwriting requirements are a little bit more flexible. Now, if you're looking at a conventional or a conforming or a jumbo loan, especially on a jumbo loan, The difference between a 700 credit score, a 740 credit score could be an eighth or no more than an eighth of a point in most cases.
How about like a 30-year conforming Fannie Mae type of a loan?
Very, very slight difference.
Very small.
Not even enough really. In most cases, we would price them the same, but our delivery, the cherry on the delivery that we have to our investor might not be quite as great. We might quote you the same rate just because it's such a fractional difference. Mm-hmm. But at some point, there is a delta.
Okay. And is there a difference in the rate structures between refis versus new loans?
Not in my case. I know some lenders would have some pricing delta as a result of that. In my case, no. I mean, if it's a $200,000 purchase loan or a $200,000 rate and term refi, the rates should be comparable. The only time you're going to see a difference is if you're doing a cash out.
Oh, on a cash out, it would be a little higher.
Cash out's got a little bit more of what we call a band of risk. It's not quite as palatable to the investors as a purchase money loan.
Even if you're only loaning at 80% against market value?
It just depends. I mean, some of the investors are going to give you a little bit of a hit for a cash out refi. They like to go to 75 versus 80 on a cash out versus 80 on a purchase, stuff like that.
I see. Well, thanks a lot. That's all I wanted to check on. Appreciate
good questions.
Okay, bye.
All right, that sounds great. Great call, Paul. Thanks for calling. Thanks for listening. All right, we're going to take a quick break. We'll catch our breath. I've got a lot of material to get to, and we'll take your calls at 281-558-5738. We'll be right back. Welcome back to the show. This is Frank Sheehy. This is the Home Finance Hour. February 5th, 2015. And let's get it on, Houston. This is going to be the beginning of a great spring. Our wintertime, this is the last gasp right here. We might have a couple more weeks of this, and then it's going to be crawfish season. And we can get on with the business of doing business. Did you hear about this new car that came out, the 2016 Mercedes Maybach? Starts at $189,350. Posh new stretch sedan. It's a bargain compared to its ultra competitors, the Bentley and the Rolls-Royce. They revived the car 12 years ago when it originally carried a $360,000 price tag. This is what happens when you add equipment and 8 inches linked to the best luxury sedan in the world, which is the S600. This car has a 523 horsepower V12 engine, providing get up and go, a roomy rear cabin. It includes seats that recline. It also has a unprecedented level of equipment for the suspension and a camera to adapt to uneven road surfaces. The Maybach at $189,350. How about that? That's what you can do with all the money you save from refinancing your mortgage. We're talking about our borrowers and some of the stories we've come across here. I have a guy right now that's has a house. We got an appraisal back on it here in the last few days. And you know what he's going to do with the money he's taken out of his equity in his house? He's buying his mom a car. I thought that was pretty sweet. That's pretty righteous. Now, he's not getting her a Maybach, or he's getting her a pickup truck. I don't know what he's going to get her, but I thought that was pretty nice. He says, yeah, I can take out the $30,000 out of the equity of my house. My payment still goes down, and I can get my mom a car. So I thought that was pretty sweet. Boy, you know, another loan that people are not taking advantage of, and I see a lot of these folks, the VA loan is still a great program for people. And I think that we will see more and more interest in this. Of course, this is a zero down loan program. So in essence, if you could have the seller pick up part of the closing costs, you could actually close on the loan, zero money down, no down payment. You do pay what's called a funding fee in most cases, and that is a great loan option. It's the only loan you can actually do now with no money out of pocket that's a standard agency loan product. Had another borrower this last week, closed a couple weeks ago actually. I think I've told this story before, but she had a house in Spring. She's a past customer. I did her loan 15 years ago when she bought the house. She made a down payment on the house, lived there for years and years, retired, very nice lady, and she's wanted to move to the Woodlands. And her house was worth a couple $100,000. She'd had it paid off by that time. And she says, I don't want to sell my existing house and then move somewhere and then close on the new house. But I also don't want to come up with a bunch of cash on the new house. How can I do that? So what we did is we had a new property, and I don't remember all the exact amounts, but let's say the new house was $250, and her current house was worth $200, but it was paid for. So what we did is we had her put down 10% on the new house, which was $25K, which she could manage. And then we wrote a $150,000 second lien on the new house with the intention that when she sold her current home, she would take the proceeds from that loan, or pardon me, the proceeds from that sale, and pay off the second that we put on the new house. And there are a couple reasons to do that. Number one, it allows her to close only one time. All right. She can buy the new house, keep her old house, get it ready to sell. Maybe it takes a month or two. When she sells that house, she pays off that second. She's only left with a $100,000 mortgage, right? $50,000 down plus the $150,000 second. She's only left with a $50,000 mortgage, excuse me. So in that case, she was able to not have to refinance the mortgage, pay a second set of closing costs, and make it a very seamless transition. And we see that very often now in this market where we have people that have contingencies that cannot be overcome. A lot of people have to sell the house they're in to buy the house they want to buy. This gives us a chance to get around that. So that's a very good option. We have a couple vendors here in town that will do those second liens up to $200,000. So that's a great option for folks that have some equity in their existing house and want to try to get into another one. Average price of rental properties in San Francisco jumped 15% last year, reaching a median cost of $3,031 a month. Denver rents also spiked 10% to $1,800 a month. Since 2000, rental prices have risen an average of 52% nationally, while renters' incomes have increased only 25%. I bring that up because we have a lot of questions about investors and buying investment property. I've owned investment property going back for 20 years, and I think it's a great investment. However, I do have this one caveat, especially for people that are in a market like ours where we don't have this huge upside to rents. In Houston, I don't think we do. I've seen it. The rule of thumb for me is on a $200,000 property, I need to have my rents within about 1% of that $2,000. In my experience in the last 2 to 3 years, it's very hard to meet that 1% rule in this market. The rents have not kept up with the values. Over time, they will. But if you're trying to buy investment property now, you've got to keep that in mind that your cash flow is going to get squeezed a little bit because rents have not kept up in lockstep with the values. I thought when we had these oil prices move up a little bit that it would slow down the price increases a little. But I don't think the pricing of oil is going to stay at $40 or $50 for too long. I saw it today was up 6%. Of course, it got crushed this week. Yes, prices down one day and up the next day, but it looks like the trend could be moving upwards, which is in the long haul good for our market, if not for the price of gas at the pump. So a lot more people that have jobs that are related to oil here in Houston than are worried about the price of gas, in my opinion. So just something to keep in mind when you're looking at investment properties and trying to get the math to work. That's where you need to keep. That's what you need to keep in mind. So give us a call if you want to join us. 281-558-5738. 281-558-5738, and we'll try to get you on the air. We have. I was watching the golf the other night, before the Super Bowl. And, of course, Tiger Woods finished dead last, right? And I've played golf for years. And Tiger's got the yips. So I'm going to just give my golf tip of the week because usually we would do the mortal lock of the week a little bit later in the show. I'm going to give you my golf tip, which we're going to go to now until we don't do it anymore. But remember, folks, when you're hitting the ball out of a bunker, right, especially a fairway shot, I want you to try to keep your legs real still. I think a lot of times the reason why amateurs are hitting their ball fat out of the bunkers, especially fairway bunkers, is they're getting their moving parts moving a little too much. So when you're in the bunker next time on a fairway shot, fairway bunker, try to keep your legs real still, real quiet. All right, let's go back to the phones. 281-558-5738. We're going to go to Mary out in Katy. Hey, Mary. Hello. You're on the air with Frank.
Hello.
Good afternoon.
Hi, I just ran to get some documents. I apologize. I got a pre-approval from Chase Mortgage about a week ago, and I was wondering if your organization would follow the same kind of format. Number one, my credit was about 700, but the reason I think that instead of getting an 80-20 type loan, they said because I was in a duplex, they could only go 75. Is this true for duplexes, or is it just... I'm between Morton Ranch and Greenhouse.
You're trying to buy a unit in a duplex?
No, I apologize. I'm trying to refinance and pull cash out.
I hear you. There may be some limitations on a cash out, yes. Now, do you own both sides of the duplex?
No.
So you only own one side of the duplex?
They're both fee simple.
Then then I don't consider that a duplex.
You know, that's what I thought too.
Just because you have a common wall doesn't mean it's a duplex, because the legal description is going to be your unit. A duplex is when the legal description includes both units.
Okay, interesting.
Once again, and I'm not being critical of any particular institution, when people go to these big national big box banks, you're getting the lowest guy on the totem pole to answer your question. You're not getting a guy like me that's got 30 years of experience, that has his own business and has been his own business, had his own company for years.
Okay.
All the guys with the amount of experience that I have are the guys that are managing all the minions that are giving you the bad answers, the wrong information.
Okay.
So.
And by the way, for a 30-year loan, I was quoted 5.75. When I'm refinancing, a 4.75.
Yeah, 30-year mortgage rates, and we don't quote rates specifically on this program, number one, because I can't. But I will tell you that 30-year fixed-rate mortgage rates with your credit score, given your situation, would run between 3.625 and 3.875.
From your company?
Well, from any reputable lender that would give you the right information. Once again,
this is Chase Bank.
I understand, but the guys that are answering the questions for the call-ins or at the branch level are the guys.
No. I sat in front of this person.
Okay, and they probably have worked there at that position. If they're any good, they got promoted up. So most people are not experienced to answer these questions. They garbage in, garbage out. If I put the wrong information in my pricing model in my computer, it's going to spit out the wrong information.
Really?
Yeah.
Okay. So I meant to ask your screener, what's the name or what's the website for your company?
My name's Frank Sheehy. Our company is the Integrity Mortgage Group. You can call me right now and just leave a message. It'll go right to my voicemail, 713-539-9697.
9697.
713-539-9697. You can Google my name. It's Integrity Mortgage Group. I'm all over the internet. I've got my own radio program.
And you're here in Houston?
I'm right here at we're right at Derry Ashford and I-10 right now. I'm looking right at the window. I can see the cars whizzing by on I-10.
And integrity is spelled I-N.
Tegrity.
Okay.
And I'm a Virgo.
Okay. Well, you give me some hope.
It sounds like your loan. I could do just based on what you've told me, I could have your loan done in 10 minutes.
Really?
Yeah.
Well, there's a small thing of an appraiser. And 4 years ago, my neighbor had his house appraised, which is a duplicate of mine. I went to BBVA Compass, had my house appraised. At that time, they absorbed the appraisal costs. Now they don't. He had to pay Chase $500 for his appraisal. Both appraisals came in identical.
Yeah, it's cookie cutter. They use the same sales data. We can cover specifics, Mary, but if you want my help and you say, Frank, this is what I need to get the deal worked out, I mean, I have the stroke to do that for you.
Okay. I'm about, towards the end of this month, I'll have my house ready for an appraisal.
The appraiser doesn't care. This is another misnomer. The appraiser does not give one hoot about the condition of your house.
Really?
All they do is they want to know the measurements. They could care less.
Okay, that's interesting. Okay, I'll leave a message for you.
Okay,
then.
thanks a lot.
Bye.
A lot of bad information out there. That's why the internet's never going to put a guy like me out of business, just because of a call like that. Okay, we're going to take a quick break. Gary, I know you're holding. I know that was a couple questions on that. If you'll stick through the break, you'll be the first one up on the other side. 281-558-5738. Give us a call, and we'll be happy to help. Okay, we're back. Welcome back to the show, everybody. This is Frank Sheehy. This is the Home Finance Hour. Got a lot of callers today, so we're going to try to get right back to the phone lines. 281-558-5738. Real quick before we do so, I just want to talk about one of my advertisers, Suzanne Brown. Suzanne saved a deal for us this week on a gentleman out. The property's near a lake here in South Texas, and we had to get some flood insurance as required by. It's a long story, but we had to get some flood insurance. She got it for us done very quickly the same day and saved a sale for us. So I just wanted to mention that. Let's go back to the phones. We're going to talk to Gary. This sounds like a question I don't know if I can help you with or not, but we'll try. Go ahead, sir.
Hey, Frank. Yes, my question is, I bought some property 2 years ago this April. It's 2.5 lots, 2.5 acres. But since then, the property has probably doubled in its value. It's in a real sought-after area. And but my interest rate is 7%. Is that a pretty common interest rate for a lot loan?
Who did the loan?
People's State Bank out of by Cold Springs.
What was your intention when you bought the property?
To build a home.
What is your intention now?
Well, to build a home is a little bit more expensive than I was thinking. My house is probably, the house I live in now is 2,800 square feet, and we probably paid $60 a square foot 15 years ago.
No, it's $120 a foot to build.
Yeah, and so to build a house, the cost, it looks like around $300,000.
It's hard to refinance a lot loan because there's the lender has no incentive to take themselves out of a 7% rate, and most of my people that we do lot loans with don't really like to refinance it. I will, if you want to try to call me off the air, I'll see what I can do. Where's the property?
It's in Montgomery, Ridge Lake Shores.
Okay, it's in a good area. I know where that is. I've done some deals out there. It's not a great fertile environment for refinancing lot loans, Gary. I might have one investor that will do it, but other than that, your best bet would be to go back to the current lender and beg for some kind of relief. And they probably could refinance one of the units and possibly give you a release and give you one of the lots free and clear. I mean, there's a couple scenarios, but all of them are going to be dependent on them wanting to play ball with you.
Mm-hmm. Okay. And then whenever they're saying 7%, that's 7% of the total amount per month.
7% of the total amount per month. If it's amortizing, it's going to be based on a payment with a rate of 7%. So I'd have to look at is it set up on a 20-year loan? I do a lot of lot loans that are interest only. 15-year amortization, yeah. So it's 7% on a 15-year amortization.
Yeah. Okay.
You can reach me off the air, 713-539-9697 if you want to try to give me a call.
Okay, Frank. Where are y'all located at?
I-10 and Willcrest.
I-10 Willcrest. Hey, Frank, I sure appreciate it.
Thanks for the call, sir. We'll try to help you out. All right. Okay. Tough situation because these loans are not. Lot loans are not set up like agency loans, like conventional or FHA or government loans. So it's a little bit different animal. So we'll just keep rolling here. Let's go to line one. I'm going to go to Stan the Man.
Hey, I'm having trouble getting bi-monthly or bi-weekly payments set up on my mortgage company, and I had a question about, since property values are going up so rapidly, what would happen if they needed to adjust?
Adjust what?
My escrow.
Well, your escrows aren't going to change that much. Is your house new construction?
Yes, sir. Actually 2 years old.
Your taxes and your escrow amounts should have kind of equalized the last cycle. The only time you really get hurt on an escrow account on new construction is if they're collecting for unimproved taxes in the year that you close. Most of my closings on new construction, we collect for the improved taxes so people don't get caught in a bind.
Yep, that's happened to me already.
So if that's happened to you already, it won't happen again because your taxes have already been calculated on the improved value.
Excellent.
As far as a bi-monthly payment, if you want to set up on a bi-monthly payment, I'm sure you can get it done. I am not a big fan of bi-monthly payments.
Really?
No, and here's why. First of all, you pay a setup fee of $300 or $400 to get it done. Total ripoff. Number two, your bank is taking 2 payments every month, so that's 24. It's really going to be 26 if they do it every other week. So that's 26 partial payments a year. 26 divided by 2 is 13. If you want to prepay your loan, make that 13th payment somewhere in the year. Then you don't have to pay the processing fee. You don't have the bank having access to your bank account, which I hate. And you don't have to be set up on their schedule. And then if you ever sell or refinance the loan, you got to go through the headache of unwinding their access to your account. So I'm not a big fan of biweekly loans. I am a big fan about prepaying your loan. I'm just not a big fan of the bank setting it up on their terms.
So you'd recommend just send a 13th payment instead of doing 26?
Discretionary prepayment of a loan.
You got it.
That's how I roll, Stanley.
All right, you're the man. Appreciate it.
There you go. That's good advice right there. That's going to be in my book, though, biweekly, and how to overcome the bank's interest in doing a biweekly loan for you. Okay, let's keep going. We're going to go to Dave. You're on the phone with Frank. Good afternoon.
Hello.
Hello.
Hi, my name's Dave. I got a question. We bought 2 houses over in Kemah last year. We're renting one right now, and we're living in the other. And we're considering buying a brand new house for ourselves. The 2 houses that we have one's 5 years old, the other one's around 12 years old. So we're thinking about using the 2 houses for rental income and security for the purchase of a new house for around $400,000. Is that possible?
Absolutely. It's a great plan.
Okay, so what would have to be done? Just verification that we have monthly income coming off the houses?
I can only use, it depends on whether I even need to use the income. But, yeah, we would verify it by lease, and also your tax returns would show the rental income.
Okay, all right, very good. All right, and you're going to leave your phone number.
Yes, I'll give you my phone number. Do you want it right now?
Yes, if you could, please.
713
Okay.
539 9697. 713 539 9697.
Got it. Okay, thank you, Frank.
Okay, or you can just Google my name, Frank, last name Sheehy. Go to our website, FPS Lending. We're on integritymortgage.com. I'm all over the internet. Although you might see my son's baseball stats on there because we also have the same name, so just beware of that. Because I hit right, he hits left. I'm actually a much better hitter. All right, let's keep on. We got time to run a commercial, I guess, if you want to. We're going to take a quick break. 281-558-573. I'm going to catch a break. We'll catch one more segment on the other side. Let me give you one more tidbit as we go into break. Ford, BMW, Volkswagen, and other automakers now routinely fit their new cars with sound-boosting technology that artificially increases the engine's roar. Without these tricks, the engine's throaty purr through a car's speakers, today's efficient engines would sound less powerful. For the 4th straight year, the 2 most popular computer passwords are 123456, password, other common passwords, let me in, all one word, baseball, and the ever infamous QWERTY, QWERTY. Bet you didn't know that. Okay, endless information, a font of endless information here on the program. 713, that's not the right number, 281-558-5738, 281-558-5738. Give us a call. We've got a few more minutes if you want to get in. Next week I will be taking the week off. Ronnie will be in to do the show, and I know he loves doing it, and it's always a treat to listen to him. So he's going to take the show next Thursday so I can keep it fresh, y'all, and get some new material and keep it going. What happens if I swipe my debit card as credit? You know, when you go to the grocery store or wherever and it says credit or debit, and then you have to give your PIN number, which I always thought was kind of freaky when you give your PIN number. With a credit card, debit card or credit card, they considered offline or online transaction. The funds for offline transaction are deducted after the merchant settles with the credit card processor. That takes 2 or 3 days. When you do an online transaction, which is your debit card, that immediately is deducted, obviously, from your account. The reason why these things have all changed is because of when the Dodd-Frank Act was passed. They limited the fee the transaction fee at 21 cents, which was lower than the original fee that used to be in place, which was at 45 cents for these interchange fees. So that's why you see a lot of these banks having to eat that difference, why you don't see free banking and debit rewards like you used to. Because of the cost of the transaction, the benefit of the transaction is less and less for the lenders. Once again, that's why it's always better to sometimes look at doing business with a smaller financial provider, because only financial providers over $10 billion in assets are subject to these limits on these costs. So keep that in mind. Same thing on car loans. You know, credit unions still are a good bet for car loans for the same reason. Buying a car this year, think about a credit union. You know, credit unions, they have a really storied past. They became a big deal in the 20s, and they go all the way back to, you know, the early 1900s. You won't find a credit union with investment banking operations. They don't have a lot of the revenue opportunities that big banks do. So as a result, they're more aggressive when it comes to car loans, new car loans, used car loans, etc. Survey found, and we pulled this off the Motley Fool, a survey that was run that said the difference in savings between a used car and at a credit union or at a bank is about $398, and with a new car about $1,200 that you can save in some cases by looking at going through a credit union. So just keep that in mind. Same thing with these debit cards that are offered by smaller banks. They don't have quite the regulation requirements that the bigger banks do. Same question that we had with the lady that called earlier today about her mortgage. She got bad information because she wasn't going to the best source to get the information. As a result, she was given the wrong information, and probably was the difference between her getting a loan and not getting the loan. And it's too bad. Hey, is your birthday in February? A lot of people have a birthday in February. 19 freebies for your birthday that you can get. Barnes & Noble. Kids can get a free cupcake on their birthday. Captain D, kids 12 years and younger get a free meal on their birthday if they sign up for the Kids Birthday Club. IHOP. If you join the Pancake Revolution, you get a Rudy Tooty fresh and fruity pancake meal on your birthday. Come on now. Jamba Juice, free smoothie. Red Robin, free burger on your birthday if you sign up for their club. Ruby Tuesday, free burger on your birthday. Starbucks, get a coupon or a free birthday drink by signing up for their loyalty program. And then Zaxby's, which there's just a couple of those here in Houston. Not just a sandwich, but a free meal with fries and a drink and a nibbler for your birthday by joining the Nax Mail Club. I mean, where do I get all this stuff? It's good, isn't it? I love it. What else we got going? Well, it's going to be a big spring. I can tell already. The bad weather's almost over with. We've been very busy. I see a cleansing of my clients' balance sheets as they come in the door. They're more prepared. They are asking really good questions. They're listening to other options. You know, I've had a lot of people call about refinancing. Let's not go to a 20-year. Let's go to a 15-year. Let's not go to a 15-year. Let's go to a 10-year. Let's get your loan paid off. Let's think about selling your existing house and moving up. I had a lady this last week. She's a single mom, 3 kids. Her house is worth more than she thought. Her realtor called me. She said, I don't know if she should refinance her loan or sell her home. So we went through all the information. By the time we got done the phone conversation, she said, I can have 400 or 500 square foot bigger house in the same school district in the same neighborhood for a smaller payment than I'm paying now. I need more room. So these are all the things that we go through when we're looking at the options that you have available to you. I am not trying to sell you a mortgage. I'm trying to give you the best information because we're trying to create customers for life. People that come back to me over and over and over and over. I've got Amanda from my office here sitting in the studio with me today, and it's really true. We see the same people come back year after year after year that have done business with us for 20 years, 15 years. Their third, their fourth, their fifth, their sixth, their kids, the people from their church, their friends coming back to me over and over for help. It's not because I try to get them to borrow more money or try to gouge them with their interest rate or try to sell them something that they didn't. It's because I listen to try to get them matched up their needs with what I can offer, and that's what I'm all about. So this is Frank Sheehy. This is the Home Finance Hour. We're here every Thursday. For those of you that listen, I get a lot of emails, so I know people are listening, but appreciate your business. Appreciate a lot of people going back to even the Saturday show that we used to do, have gone to the switch over with us, and we really do appreciate your business. I do want to just... answer my phone real quick. No, I do want to just mention also, too, this is a great time, folks, to go out and look at doing something. I noticed or mentioned earlier in the show, my neighbor put his house up for sale last Friday. He sold his house that day. He had open house already scheduled for the weekend. His house is already sold. So this is a great opportunity if you're trying to get out of your house. He did spend some time getting his yard done. He got some paint done. He got all of the leaves pulled out of his gutters. He got his yard done. He got the mulch put down. His house looked really good. I walked through it with him over the holidays, and he'd done a great job. It looked great. And he just doesn't need a big old house anymore. He's moving into town. He's got a place in Galveston. He doesn't need to stay there. And whoever got his house got a really good deal. He priced it, and it was ready to sell. So this is a great opportunity. If you want to try to pull some equity into your house, you don't want to sell, this is a great time. Access for cash to fund whatever project that you've been putting off. Maybe it's home remodeling. I need to get some work done on my house. I just got a bid on a roof at my house. This guy gave me a great deal compared to some of the bids that I've been getting because he says right now we're slow. The weather's bad. No one's doing anything. I got to keep my guys busy right now. You know, if you wait two months, this bid's not going to be out there because the weather's going to be good and everybody in town is going to be calling me wanting to get a roof redone. So this is a good time to think about doing that. We talk about the show all the time. Keep it fresh. You got to keep it fresh. Keep it up to date. Take care of your business. Pay down your debts. Pay your bills on time. Love your kids. And that's what it's all about. That's really what it's all about. Let me see if I've got one more thing we can get to here today. Did you hear about this? I know a lot of focus on cars today. That's kind of a theme. Electric car owners in the U.S. are getting a boost from two German auto giants, BMW and Volkswagen. They're teaming up to build 100 fast charging stations and express charging corridors from Portland to San Diego on the West Coast and Boston to Washington on the East Coast. The station will charge a car, a Beamer, or a VW, along with the Chevy Spark in a half an hour. 80% in a half an hour. They also will feature level 2 chargers, which require 4 hours to fully charge a car. This will only work on the Volt, the Leaf, the Nissan Leaf, and the Toyota Prius. The goal is to one day accommodate all models, including the Tesla, which currently has its own proprietary charging ports, but also the Tesla you can charge here in Texas. You know, right there on I-10, right over there by, Columbus, right in that area. Okay, how are we doing on time? We got another minute. Let's just talk about my mortal lock. Okay, I went with the Patriots, and I got that one. That was an unbelievable. That's a play that will be talked about for years and years and years to come. If you want to reach us off the air, 713-539-9697. We've had a lot of success stories we shared with you today. It's amazing people don't realize how much their homes have gone up in value the last couple of years. If you're thinking about doing anything, this is a great time to consider refinancing or pulling some cash out or selling your existing home. Interest rates at all-time lows, and it's a great time to be in the mortgage business. So thanks, everybody. Have a great weekend, and we will talk to you next time.